this is Pat Walker, Mission Winners. Just doing a little preview on what we're going to be talking about on Saturday. Everybody's got this goal of, hey, I'm going to get involved in the stock market. I'm going to make some money. I'm going to be the super trader. Yeah, man, I see other people doing it. Yeah, we're going to go in there. We're not going to take any survivors. We're going to do this. And that's good. I'll share this with you. I admire your enthusiasm. But you've got to take enthusiasm and you have to refine and hone your skills. Tom Brady could sit there and say, yeah, man, I'm going to do great. I'm going to be the quarterback. Everything's going to be great. If Tom hadn't practiced, he had God-given gifts, okay? Let's be honest. But if he hadn't really practiced and worked hard, probably wouldn't have heard his name, would we? So, and that's not a criticism against him, okay? That's not my point. The point is this. It's important to know what to do, and why you're doing it. That's part of our big foundations at Mission Winners is explaining what are the traits of super stocks. Once we get that foundation down, we look at both the fundamental traits and the technical traits. A lot of people are really big on fundamentals, but they really don't know much about charts. A lot of people are really good at charts, but they don't really know about the story behind why the company's doing what it's doing, and why the chart's doing what it's doing. I want you to think about this. Why do stocks go up in price? That's not a rhetorical question. I was an IBD media co-leader for 12 years, and I used to ask groups of people every time, why does a stock go up in price? Well, they've got a really good product. Nobody else does as good as what they do. Their profit margins are expanding. The return on equity is really high. Yes, the PE ratio is relatively low in relation to the industry. That's all great, okay? But you know what it is? I'm going to cut right to the chase. Why do frickin' stocks go up in price? Because there's more buyers than sellers. Remember that. More buyers than sellers. What's our job? To find out the spot where the buyers truly overcome the sellers and the stock can explode in price. If you can hone that skill, you'll be light years ahead of most other people. Cold hard facts. So, let's get some foundations down. Right here. Proven traits of super stocks. These are super stocks. 80% of them had earnings up 40% or higher in the first quarter before they went up. 80%. Folks, I taught statistics on the university level. That's an edge you can use. 80% is meaningful. 75% had sales up 40% or higher for 2 quarters. That's an edge you can use to find super stocks. All right? 80%. Would you go to the casino with 80% odds? Sure you would. By the way, that leads to another point. I used to hear this a lot when I was managing money. Yeah, I could take a gamble on that. When you go gambling, does the house want you to win or lose? They want you to lose. Okay? When you invest in corporate America, in great companies, do they want you to win or lose? They want you to win. Remember that. Remember these foundations. 80% had earnings up 40% or higher. Again, that's an edge you can use. All right? Now, taking this foundation, I'm going to show you some of my screens on MarketSmith. Right here. 90 earnings, 90 relative strength, 90 composite rating, A-rated group, 40% earnings and 40% sales, composite rating 90. Bill screen. By the way, I was in the beta test group in the development of MarketSmith years ago when it was called Daily Graphs Online. So yeah, we know how to move around in it. 40% earnings, stocks in the top 40 groups. 45% average sales for 2 quarters. 50% earnings in the top 60 groups. You can see stocks in the top 10 groups. You can see the foundations of what we do here. You can say, geez whiz, man, it's going to kick out a buttload of stocks. No, it's not. You can run these screens. How many stocks does it come up with? Oh, sometimes between 80 and 120. That's it. By the way, I don't look at low-priced stocks, all right? They're low-priced for a reason. I want quality. And I also don't do thin stocks. Stocks that trade 40, 50,000 shares a day. I don't want to mess with them. They're great going up, and when they flame out, you get stuck. I've seen it. I want to stack the deck in my favor. We run it like a business. You know why? Because it is a business. Sweet business. Some of my screens. Right here. Scan for high quarterly earnings and sales growth. Leading industry groups. Look for key price and volume relationship. Positive earnings estimates help. Okay, average estimates on super stocks, 48%. Documentable. All right, it's great. I love it. We're stacking that. You know what we're doing here? We're building a case. We're building a case. Then we take it out and we round it into the max list right there. I put this list together, oh gosh, some of these stocks have been on the list for 12, 15, 16 years. Some of these names. Go-to names. Institutional names the funds have to own or the managers are going to be fired. Okay? Can you imagine being a mutual fund and you're going through, or you're buying a mutual fund and you go through the prospectus, it's a growth mutual fund and it doesn't own Google? It doesn't own Apple? It doesn't own Amazon? Or it doesn't own Netflix? Are you kidding me? These are the franchise names. Go-to stocks, the max list. Love them. We're going to go talk in depth on Saturday morning. We're going to put all the pieces of this puzzle together for you. All right? Saturday morning, we're going to have a conference, webinar conference. It's free. And we're going to go in depth. And again, a lot of people talk about various components of the puzzle, but they don't put the whole puzzle together. We're going to put the whole puzzle together. We're going to answer your questions. There's not going to be any stone unturned. And I'm kind of excited about it. By the way, I haven't had a Red Bull or anything when I'm talking. It's just how things are. So, let's take it a step further. I'm going to show you some examples. Tesla's one of them. You see this little shelf right here? It's a max list stock, pushing through that spot. This was on the key list on this day, 12/6/19, taking out that line. What's it do? That. And that. And that. And this. All the way up here. From basically 340 a share, up to, $9.40, $9.60, $9.70 a share. That's good, the last time I checked without a calculator, for over 600 points on a $340 investment. Yes, we owned that. Yes. And it worked. It worked like a champ. Case number one. Case number two. Inmode. By the way, earnings up 109% before it broke out. Average price, $27.31. We bought it right in here. See that line right there? And we bought more here. And look at the nice trend. You can say, well, I don't know, 25, 26, up to 27, up to 57, 30 points. Okay, that's a lie to say you sold it at the top. But hey, I'll tell you what, 27 to 50, taking some out on that line there, that's not bad money. That's dang near a double in what? 1, 2, 3, 4, 5 weeks? And again, how we build a case? Look at those numbers. That's what we're after. Another example, Acacia, entry right here. Just marching on up. Earnings up 193% before it broke out. You know what I call that? I call that building a case. Right there. That's more than a double in a relatively short period of time. Another example. COOP, right there. Look at that nice clean base. Is that sweet? Great. It had either great earnings or great sales. I do believe this one had great earnings. In it 70 up to almost 100? Now, that's a lie to say you're going to sell it at the top, but would you be happy from 70 to 90 in a relatively short period of time, like what, 3.5 weeks? Look at that march. Look at it walk up the 8-period exponential moving average. That's what we're looking for. Here's a recent one for you. GSX. Look at this right there. That's from mid-November last year. That's not that long ago. Right in there. Entry 1782. Revenue's up 441% the quarter before it breaks out. Look at that. 17 to near 40. That's good money, folks. That's good money. Abercrombie and Fitch. You got a simple buy right there. Just a nice base, and it lifts off and it runs. Is that a huge move? No, but it's money. It's money. By the way, I will tell you something. On all of these, I'll do one more for you. On all of these, nice breakout right here. 12.50 to near 20. On all of these stocks, we never looked at a 5-minute chart. Never. So what's our goal here? To speed up the learning curve. Every night, We make a video, a tutorial video, an in-depth tutorial video for VIPs, looking at the charts, noting the earnings and the sales growth, the industry group rank, everything to build a case, to have the conviction to buy the stock. We answer the questions. The next day, we put in here, and I'll show you. There's a VIP buy alert. On our Twitter feed, it shows that, and I'll say, I am buying Tesla. I am buying Amazon, whatever. I am buying, like right here. We bought Amazon right there, and we bought more right here, taking out that line. Amazon. And at one time, you know, we sold some off. It's almost 400 points. That's what we're looking for. They all don't do this, but that's what we're after, is that rocket, that fuel to lift that ship off the ground. So we tell people, I am buying Amazon. And then I put the order in. I wait a little bit. I don't front run. I wait, and I put the order in. And then I'll put a little window in there, and it tells people that we bought Amazon and what price we bought it at. If I'm selling a stock, this is the alert that I put in. I am selling Amazon. I am selling Google. I am selling Tesla, whatever. And then I'll put the order in, and then I post it, filled at whatever price. Completely transparent. No day trading. No 5-minute charts. No scalping. Why? Because a good trend pays more than a little hiccup. And we are after good trends all the way through. It's what we do, and there's a lot more we're going to be covering Saturday morning with our webinar on putting the pieces of the puzzle together. How do you put it together? How do you manage the stock? What are the tools and tactics? I've been doing this since late 1985, and I'm very pleased and proud to say that I've had a lot of people that really influenced me through the years, and some of them I've met. I've met Martin Zweig before. I met Bill O'Neill. Anyway, I wanted to share this with you and explain a little bit about what we do, and you're going to get a lot more Saturday morning. It'll be worth your time. They always talk about they'll shop, not steal. There's a lot of things you can steal. You can steal a person's possessions. You know what else you can steal? You can steal a person's time. And you know what? I'm not going to steal your time. I'm not going to waste your time. We're going to make it worth your while. So thank you for your time on this, and we'll see you Saturday. We're going to turn it up a notch.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.